Hello.
Hi.
Hi, Helsinki. Hi, Peter. Thanks for joining on stage. So, Adyen. Mobile payments, but also omni payments. You guys are doing payments across a whole bunch of things. You're based in the Netherlands, which is not known as Startup Central. Can you give us a little bit of a sort of short history of how you came to found the company in Amsterdam and why you're still there?
So the company was founded by 4 people who were already in the payments industry. Actually, what we did is we sold our former company to what is now WorldPay, so the company that went public recently. And we felt that it was A, shame to lose our company by selling it, we missed it. And B, with all our knowledge, we could change the industry from inside. So knowing all the things like high cost, invoices which are not related to the actual cost of transactions. So what we wanted to do is to be the ones with all the inside knowledge to change the system.
Okay.
And we happened to be in Amsterdam, so we started in Amsterdam, and we did that from basically after 1 year, we already had our US office. So we did it with the intention to build something big. Because if you had a company, you're not going to start a new company to make something small. That was ambitious and with a much longer horizon than what I see with the many new companies.
Okay. So you get a lot of companies, a lot of startups. I mean, you guys don't consider yourself a startup, which we'll get to in a second.
All right.
But a lot of, let's say, a lot of smaller tech companies that are growing in Europe, there's this idea that they all need to make a move to the US for their growth. You guys are still in Amsterdam, although you've got offices globally. What's your thoughts on that? Do you think that eventually you guys will have to move headquarters to the US or anything like that?
I can make a long list of what is all wrong about Silicon Valley. The developers are too expensive, they're not loyal, and it's difficult to find housing, expensive, but the fact of it is, it does happen in Silicon Valley. So even if you can mention things which you dislike about it, it's where it happens.
Yeah.
So we did indeed open an office in San Francisco. We have we have a good part of our company there. About 40% of our customers are from the US. So yes, it is a necessity.
But do you think that you may ever leave Amsterdam and just move over there altogether? Or do you think that you can build Adyen into an even bigger company in the current situation?
No, we spread ourselves out. So we have, of our board of 5 people, 1 of us constantly in the US. So we rotate, but it doesn't work if you're just in Amsterdam.
Right.
So we spread ourselves out. If you're a global company, just the US focus is not enough.
Right.
But it does need managers on the ground.
Okay, got it. Okay, so Adyen is a funny company because it's not like a lot of traditional startups in that, well, for starters, you don't like the word startup. So tell me why you don't think of Adyen as a startup.
I do think we are a startup.
Oh, okay. Well, tell me what you don't, why you don't consider yourself a startup like a lot of. I said, let's talk about startups.
I understand the question. The question is, if
I don't want to talk about.
If you're 9 years on the road, if you're profitable, which is sometimes seen as odd, if you have enough money, you're not looking for funds, it seems that you're not a startup anymore. If you look in terms of growth, and we double each year, but also how we manage the company, because we feel that the interesting stuff is happening where IT is intersecting with customers. Mm-hmm. And you usually see that at a certain point the company gets of a size that it all disappears in silos. And we very actively run a strategy to make us work as a startup, to make sure that people still have the freedom, the autonomy to operate. And we spend a lot of time on HR to make sure that that doesn't disappear, even with the size and all the flagship customers that we have.
Right. Okay, so another area where you guys are not necessarily maybe traditionally startup-like is that you took very little funding up until last year. You had basically a small round from Index Ventures. Then you took this like monster $250 million round.
Yeah.
I don't know if you could call it bootstrapping, because you did have some venture backing, but why did you decide to do it that way? So did you not need more money, and why didn't you? And then why did you decide to pick up the huge round of funding, and then another one from Iconic Capital earlier this year?
We felt that we can only grow our company so fast that we double each year. And payments is very knowledge intensive. If you decide to build a payments company as a wrapper around the existing systems, you can move very quickly. You get great interface people, and there you go. If you really want to give a higher quality of service, then you're building everything all the way to the card schemes and to payment methods. So then we have been called the Navy SEALs of payments. You're not going to recruit Navy SEALs or find them one day. You build them. And that takes time, so we didn't need that much money. And in our former company, I felt uncomfortable with all the different rights attached to different rounds, the B and the C round with liquidation preferences, board seats.
You mean before you founded Adyen?
Before we founded Adyen, you could.
You're talking about Bitband here?
Bibit.
Yeah.
So my lesson was, if I do it again, then I want to do it in a company with just a common share structure, no board, and where we in freedom can build something that's really good, rather than spending too much time on shareholders.
Okay.
And that attracts, again, great shareholders that accept that model.
Yeah.
So then it's a very efficient model. It's a very different model than what you currently see with very high rounds.
Yeah, more on that in a second. But now that you have raised a lot more money, you do have people on your board. Does that mean that you're now bogged down in a way that you weren't before? Or how are you able to, get away from that?
We don't have a board.
Okay, you don't have a board.
So there is no board seat attached to our shares.
Got it.
And we have been very transparent. We are transparent to our merchants, to our colleagues, but also to our shareholders. So if you buy Adyen shares, you know what you get. And that is the same rights as I have. And we're going to make, together, we're building a large company. There's no pressure for a quick liquidity. So it's a tensionless relationship, which makes it so much quicker and easier than if you have all those layers and people with different agendas steering the company.
Have any of your shareholders asked for a seat on the board and you say, nah, we don't do that? Or
we were in a position, we built a company with about 12 million of funding.
Right.
And only then we went out and we did this huge round.
Right.
And we didn't need the money. We are profitable, 45 million euros about roughly this year. So when we did the round, we did it, and we only asked very few investors that we really appreciated in different parts of the world to cover our, because we are a global company. And we came out with a plan, so basically rewrote the term sheet. Say, is this something that you like? Then let's talk. If it's something you don't like, then not. Then we approached about 7, and 6 of them liked it. 1 of them didn't.
Right. So you were able to set the terms. You were able to kind of have more bargaining power, really. Is that?
But for us, it also comes at a price which I'm happy to take, which is you get to different valuation. Mm-hmm. Because if you have anti-dilutes, if you have all sorts of preemptive rights, you have a higher valuation. You're higher on the unicorn list. For us, we just ended up on the unicorn list. We didn't want to be on the unicorn list. And
because your valuation, just to make it clear, it's 2.3 billion right now?
That's correct.
$2.3 billion.
Yes.
As of this year.
As of this year, as Iconic joined us quite recently. That
basically makes you one of the more valuable startups in Europe right now, I think, right?
I think so. I, of course, looked at the list. I think there are 4 with in this league.
Do you think it's the reasonable valuation? I know you said you don't care about unicorns. Let's not even use the U word. But, do you think you're in a fair place here?
I looked at how the assessment had been done, because there's a certain deck that investors make as to why they take this decision. And how they do it is they say, if I look at the projections, they seem to be fairly correct, because everything we said we always delivered.
Right.
If we are currently at 300 million revenue, the likelihood that we make our next year revenue number, that's what they take into account, the profit that comes with it, and they look, okay, so how much did we pay then? And then we are in a company which grows over 100% per year, which has customers like Spotify and Uber and Facebook, all as customers, and they're all referenceable, and they like the company. And that seems then a good investment. So that is, if I look at the deck, I'm thinking, well, we make a promise to keep on growing. That's what we do. I don't think it's that overpriced if we keep on growing, so I'm very focused on keeping that growth. But if something stalls, then it's not based on where we currently are, and we all need to realize, I tried to make us all realize within Adyen, this is an assessment of where we can get, but we still have to do it. We have the best card, we are light years ahead of the industry, but still we have to do it, because if you compare our volume to the volume which First Data processes, it's nothing. We do 45 billion euros per year, which is not comparable to those numbers.
So I was actually just about to bring up First Data and Square. So we've got two companies. One has already gone public. One is preparing to, in the same space as you guys. Both in very different, valuation areas, let's say. Do you think that, do you think Square, so Square's valuation as of its IPO is about 4.6 billion or something. It's about twice as much as you guys, and it's a down round. It's actually lower based, it's written down from its last funding round. What's your take on that? What do you think?
Even with the down round, Square is an amazing story. If you start a company in 2009 and you go public in 2015 for what is now, seems to be around the 4 billion, you've done a great job. And I think the whole story about democratizing payments, it is true that people who couldn't take cards can take cards. It's a very different part of the market. It is the small merchant. We tend to work with the mid-sized to larger merchants, so the comparison is different. What I find difficult, let's put it different. I understand why companies like First Data and WorldPay get a good IPO, because there is high EBITDA, a high volume, and in payments, volume and matter and EBITDA tells you how much money you make or how much money you have to pay your debts. Square is in a different place. It has, at this moment, not a significant EBITDA, it's slightly negative.
Yeah.
So it's still the belief that you have in where that can grow. So it's much more a growth story and assessing the business model. So it's much more a question mark and therefore much more vulnerable to what people think.
Do you think it's too early for them to IPO? Because, you guys aren't going to go public for a while, I don't believe, right?
The capital...
In a way, you're a much more mature business than they are.
But you have to understand, why do you go public? If Adyen would go public for shareholder liquidity, that would be the wrong reason. You go to the markets if you need money.
Yeah.
Square needs money. So they can assess, okay, where are we going to get our money from? And they make the decision to get it from the capital markets. Well, I can see that. It's a shame for them that a down round, if you look at it, what happened to the original shareholders, it gives them a less than 2% dilute. So it's very little, but if you see what it does for your image and what it does in the press, it's like, okay, so it was 6 billion, we're now at 4 billion, so that's 50% higher than where we are today. Wow, is this a turning point? If you look at it from a shareholder's perspective, I'm not a shareholder obviously, but if you look at from that perspective, it's a great story.
Yeah. Do you think, when would Adyen consider going public, if ever?
At this, we are on a path to get to high processed volume, and that's what you assess payments companies on what do you actually do, not if you can make high margins on small volume, but if you have enough tonnage, as it's sometimes called. We're on that path, so it doesn't make sense to do something now. Right. Because then you try to convince somebody else of something that I'm convinced of.
Right.
We don't need money. We raised in this round, raised that we have stability beyond any doubt. And we're having a lot of fun, and that's underestimated. But this team has fun, the people have fun, the customers like us. It doesn't get better than this. So for all of us in Adyen, I hear so often, I was just at our stand there, and my colleagues say to me, the worst thing you could do is sell this company, because, hey, we're having such a good time. And good time in the sense that this is fun to work at. So there are very little drivers, not from a psychological point of view, and also it doesn't make, from a shareholder's point of view, it doesn't make sense. Too early.
Do you think that, okay, Adyen will stay independent and private. Do you think that that's going to be the case for the mobile payments industry in general? I feel like we're going to see some consolidation.
Payments is, everybody feels that payments will change. There will be new payment methods, and you can feel the change. There are new payment, there are new ways being launched how you pay. You understand your phone will play part in it. So there's a lot of opportunity for change. So there's a lot of investment in the industry. But payments also has a nasty side of it. It's a probability for fraud, merchants that fraud you. And it's also about compliance, rules. And that side, you need size for it to have that only to be a small part of your company. So there are smaller companies that just won't make it, and there are quite a few of them that are not going to make it, which is the harsh reality.
I know that, in Europe, given the kind of focus of Slush and everything, has pretty strong Fintech, financial technology. What would be your, advice for startups in that general area, who might be here listening to you? For how to build their businesses in Europe. Do you have some kind of salient nut of advice, as we've just got a couple of minutes here?
Things that worked well for us is, it's so difficult to give the ultimate advice.
Yeah.
Usually you launch with a customer and you build what they really like, and if you build that in a generic way that is also applicable for other merchants, it's a great way if you have the opportunity to start your business that way. And, but I must say that at Adyen we did the opposite. We broke that rule, and I think it's a pretty sensible rule to make sure that you have a few customers, you build something generic, then you sell it to others. But we wanted a bigger plan, so we did the crazy plan where you build the best platform without any customer on it. And the day we took it live is the day that our head of development came to me and said, I dread this day because it was so nice that we could switch the system off. And now it will run forever, 24/7, and we have that whole thing again. But that's unusual to start in such a way that you really switch it on and say, whoa, there we go.
You must have been really sure about what you were doing, because the whole idea of build it and then they will come has almost been totally destroyed as an idea, really. That was the dot-com. That was the dot-com boom, Mach 1.
Yeah, that was a stupid way to start it. And what was the worst decision is to call it Adyen, which in Suriname means all over again. So at a certain point we had this platform and we didn't have customers, and we were like, so we called ourselves Adyen. That was really bullish. So we had to pull it off. That's what it felt like. Yeah, it was. No, of course, we also in the beginning we had our hard days, and we have the image of always exceeding our numbers. In the beginning we did not. We struggled to get this started. It was a bold plan, we knew it, but it was even bolder than we thought. It was close. It's the point where bold becomes almost stupid.
Right. Okay, on that note, where bold becomes almost stupid, thank you very much for listening to us, and have a great day and week.
Thanks a lot.
Thank you.